Distinguished guests and speakers, welcome to this session called Remittances and Financial Inclusion, Opportunities Hidden in Plain Sight. We will kick off a series of sessions on remittances which will take place today. My name is Ayako Iba. I'm the focal point for migration and remittances at MFR, and it is my great pleasure to present to you Pedro de Vasconcelos, the Manager of Financing Facility for Remittances at IFAD, who is the expert on remittances, contributing actively to placing remittances, migration, and financial inclusion in the agenda of development institutions and governments. Thank you very much, Pedro, for joining us today.
Pleasure.
So, Pedro, we both work in the realm of financial inclusion, and yet what I've observed is that those who tend to focus on microcredit seldom discuss about remittances and its role in the life of the financially excluded people. From your wealth of experience, why are remittances important for promoting financial inclusion and building resilience?
Thank you very much for that question. I don't know if I'm the expert, but I think I am one, having worked almost 20 years in the issue. Why are remittances so important? When we say first about remittances, we talk about the sheer size of the flow, the magnitude, the 540 billion a year going to developing countries. But beyond those billions, what's important, I think, is those $200, those individual transactions that are sent from family members to their loved ones back home. And that is actually what represents the most important part of remittances, the impact that these $200 have. How are they sent? How are they used? What is their impact? And, you know, the $200, you can cut overall 75% for daily needs. And when we say daily needs, we often say the families, you know, own SDGs, because this is the money that puts food on the table, sends the kids to school, pay for medicine. These are very important, needs for the families, the 800 million people that benefit from remittances. 200 million, 800 million, that's 1 billion people in the planet directly involved through remittances. 25%, the remaining, is either saved or invested, but most of the time outside of any form of financial institution. And that is what we think the key aspect. And this is hidden in plain sight. We know about this, we've been saying, but there's still, as of today, in 2021, a lack of knowledge and understanding on how to really bring this opportunity. If you have people with funds on a regular basis that are unable to access the financial sector, people don't have access to savings, credit, insurance, yet they receive this family insurance from abroad in foreign currency, crisis-free, because in terms of crisis, we realize once again that these are the most resilient flows that exist. So there's a problem there. And this is not new. It's sitting in plain sight for a long time. That might be the problem. They were discovered by the international community and governments 20 years ago. And yet we saw some issues about the cost, which became an SDG by itself. But if you think of it, the real development impact resides in this financial inclusion potential of so many with money that are out of the system. I think that's the simple, equation that showcases why this is so important in terms of financial inclusion. And we can expand this to other elements, including financial inclusion, for digitalization, digital inclusion as well. I think I can elaborate a little bit more on that subsequently, but I think this, in a nutshell, this is why it's so important.
Great. Yeah, no, definitely. I think it's almost paradoxical that when we talk about the financially excluded, sometimes we talk about it as if they're people who don't have finances, but they're just excluded. It doesn't mean that the finances don't trickle down or that they don't have the capacity to trickle down.
Absolutely.
Indeed. Well, so the European Microfinance Week is renowned for gathering experts and practitioners of our field of financial inclusion, as well as socially driven impact funds, aiming to make a positive impact, right? So referring particularly to the impact investors here with us today, in your view, why should they care about remittances?
Well, let's just look at the two words, impact and investors. And if we say investment, and if we start with the later, investment, you know, that's what remittance families do. They invest in impact in their families. If you take remittances, remittances are often seen as some sidekick of macroeconomics, and we like to talk about ODA and FDI. But if you measure the impact of the level of negative outcome that would occur if we remove remittances, or if we remove this from the economic, from the macroeconomic perspective, you will realize that remittances are at the top of what would really have the greatest impact, negative impact, if you remove them out of the picture. I would like to recall at the beginning of this pandemic, when the Secretary General addressed member states and he got to speak about developing countries, the first item on his list was remittances, because just the perspective of having a reduction in these flows for so many was really catastrophic. And that, again, was first on this list. So I think that also illustrates the impact, the investment that migrants do, the efforts in going abroad so they can send and support their loved ones, as I said, for achieving their own SDGs. So this is the investment. The impact is exactly that, is the reason why this is sent. So migrants are basically impact investors at the level of their family, but if you aggregate this, that's what it becomes also at the national level. So it is a business that in a way has a lot of course, of issues like others, but we realize that with things that are happening right now, there's a lot of needs in the ecosystem, particularly in the industry, partnerships that can occur, that are occurring, unfortunately not as much as we would like, to speed up the process, but it's happening. The evidence right now of digitalization has even simplified, or let's say increased the level of opportunities, and impact investors are looking into this. I'm not going to make the publicity for some of the beneficiaries of this recently, but many have, and at IFAD we're trying to support some of those as well, not as impact investors, but to create the right conditions in the industry to bring innovation, to stimulate basically and trickle down the benefits for remittance families. So I think this is what needs to be understood from an impact investment. It's an industry that is developing. 10 years ago, it was cash to cash. Today, we're seeing a very different ecosystem with lots of potential, and the benefits can trickle down to the other populations. When we talk about remittances, we're not just supporting the 800 million and their community, but we're supporting also their communities around. And I think the example of digitalization can do that. We often say that remittances spearhead change, and I think this is true for financial institutions, for digitalization, and this is why more investment is required in this field.
Yeah, thank you, Pedro. Yeah, I think it's amazing how, at the end, the final goal for all of us in the sector is to help these people invest in their future and in their communities. And I think microcredit back then was developed for that. It still is a channel, but what perhaps many of us don't realize is that remittances is a key, very widely used channel to do precisely that, to precisely achieve that goal, isn't it? Anyways, last but not least, this conversation can be rather redundant if nothing happens on the ground. And there are some financial service providers that could be considered, let's say, the more classical type of MFIs who have maintained a certain distance from remittances, if we may say. From the developments that you're observing right now and you're engaging in as IFAD, what would you say to these financial service providers? And what would you tell them about what they're missing by dismissing remittances?
Thank you, Ayako, for the question. They're definitely missing out, and this is happening for a long time. Interesting enough, many of these financial institutions, local financial institutions or microfinance institutions at the time when this was discovered, are actually where migrant families live. And we saw very early on that clients of microfinance institutions were not offered remittance services. They had to go across the road to do that. And that was a missed opportunity. And you might wonder why, but simply because if you were trying to do an assessment, a financial assessment on a client to give them a loan, but you don't take into account the $200 that they receive religiously every other month or every month, you're missing out in your creditworthiness assessment. That's it. And you can, from that, you're just basically missing out. It also it can increase your transaction-based business streams. It can, as I say, build your transaction history, and more importantly, we can see that it consolidates access points as well, because you're linked with remittances. So they're missing out, and the point is that the others are taking over. As we saw now, digitalization is allowing a whole new set of actors coming on board that are simply bypassing that. We saw financial institutions taking into account remittances, and not in developing countries, but in Europe, in Southern Europe, 20 years ago, this is what happened. There's a big renowned banks today that started linking remittances services to their normal financial services. And the rest is history. I can name Bank of America for that matter being like that, but there's a lot of Portuguese banks, Spanish banks, Italian banks that did exactly the same thing. And they were able to offer that. They don't call it remittances anymore. So this is something that happened already, but I wish history could repeat itself, and that's what we're trying to do, to not forget those benefits and stimulate local financial institutions to take advantage of that. There is some issues on AML, CFTs, and others problems, and this is why it requires a coordinated approach. It's not easy, but the benefits can be very substantive. So these, unfortunately, is what's missing out. But I think the market is not going to stop or wait for that, and this is basically what's happening right now.
Yeah, indeed. With our experience here at MFR, what we see indeed is that microfinance institutions oftentimes remain at the scale, at the local level, at the household level when they're assessing, repayment capacity, for example. And both in developing and developed countries. And what we don't realize is that depending on whether you're a receiver or a sender of remittances, there is a lot of impact on your monthly cash flow. So I feel that there is the need to kind of go beyond the household, go beyond the local level, and understand that financial inclusion and resilience is built at a larger level, at a larger scale. Yeah. Okay. Well, Pedro, thank you so much for shedding light on these missed opportunities from different angles. I could really go on forever. This feels just like an introduction. But would you have any final message that you would like to share with our audience today?
Yes, and maybe it's something that we've been saying for a long time. When addressing remittances and financial inclusion, it is a golden opportunity. That's how we like to say. But however, there's some problems. So therefore, there's no silver bullet. One way that it would address it does require informed, concerted, and coordinated approach among all stakeholders, from the civil society, the public sector, and the private sector as well. The opportunities there at IFAD. We've been working with this for over 16 years, promoting this access to remittances for the sending and the receiving, and on beyond that, we're trying to promote also more options for usage, and that is where the financial service comes in, where the potential for financial institutions for their own benefit, but also for their beneficiaries, right? The remittance families comes in. So I would like is to leave it at that. It is still to be grabbed. It is still there in plain sight, but it needs to be grasped by financial institutions that are missing out basically on this.
Indeed. Well, I look forward to many more conversations ahead to create more and better linkages within this wider financial inclusion ecosystem. Thank you so much again, Pedro, and thank you.
And I wish you a good rest of the debates.
Thank you. And thank you, everybody, for attending this session.